right, so here we have the economic news calendar for the last week of July. You see, on Tuesday at 7 in the morning, we're going to have consumer confidence news come out. On Wednesday, we have FOMC. So this is FOMC week. On Thursday, we have advanced GDP and core price index, advanced unemployment claims. So we got a pretty heavy news week for the month of for the last week of July. And then we have something on Friday as well: consumer sentiment, inflation, expectations. So could be real busy. And we also see that Iran is to halt its attacks as long as the U.S. maintains the latest pause. So we also still have the situation going on over there. Um, so a lot of volatility to be anticipated for the end of the week. Um, if we're looking at this candle right here, which is July's candle, we want to be looking to see if this is the last week of July, what could possibly happen? Could this candle stay as an inside candle and essentially close as a consolidation inside, and then we anticipate a run for August to happen after this consolidation? Or will this week be a strong week for the dollar, seeing the dollar close above this 101.97 level, previous quarter's high, this level that we've been looking for the last few months? If we would drop to the weekly time frame and we see what happened last week, right? What we see is that we have one, a swing low has formed. This is the most recent swing that has formed in this move up, especially with last week closing green. We have a confirmation of this swing low right here, and also within this swing low. All right, so we have this swing low right here, and we also have the market inside of, this is terrible. And we also have the market was inside of, why the hell is it doing this? My computer is moving hella slow right now. We also have that swing low has formed inside of this fair value gap right here, right? So this is a weekly fair value gap as well that we're looking for now price to start to run away from. We do see that reaction that we would want to see. And now the market, again, has formed this swing low. So this week we anticipate what? The market to trade above last week's high. And if we get some strength above last quarter's and at 101.97 level, right? So if we know that the draw on liquidity is still this 101.97, and we already have an idea that we want the market to close bullish, right, on the week, or at least expand higher, we say our range is from wherever the market opens up, right, to this level right here. But we also want to be knowing that if we are anticipating the market to trade higher or expand higher for the week, we want to be watching for where could it form its low of the week to possibly get us in line with catching a lion's portion of the range for the week. And although we looking at the dollar and we don't trade the dollar index, if we can anticipate where the low of the dollar it could possibly form for the week, and then anticipate it to be bullish from that point on, then we could also, if the markets are moving in correlation in sync with one another as far as like cross pair relationships, if we're anticipating the dollar to be going up and we see that the stock market is falling, then we can anticipate strong runs in the decline of the stock market in conjunction with the dollar going higher. But we also haven't been really putting too much emphasis on the fact that these markets tend to move in opposite direction of one another because of the fact that they have been moving in the same direction at times and not moving in alignment with that cross market relationship that we typically see the markets moving with. So looking at where we could possibly see the low of the week form, we want to be looking to our left and see what possible PD arrays or what possible points of interest we can anticipate some bounce, right? So the first thing we want to be looking at is the previous candle's range, because that is the range that we are still in. And when the market opens up, if it does not gap higher, right? If it does not gap higher than the high, which is at 101.55, we will open up somewhere within the range of last week's trading. So we want to be anticipating within that range where we could possibly form that low at, right? So I've graded out the high and the low of that range, and it's giving us like quarters that we can anticipate the market to trade from or trade down into, and start to rise from there if the dollar is in fact bullish this week. Dropping down to a daily. And so we had a more refined view of price. Here's that high, and here's the low. This is essentially last week's trading, these 5 candles here. And what we seen was the market rise Monday and Tuesday, consolidate, and then continue to rise Thursday. We saw a little bit of consolidation here to close out the week on Friday. What stands out to me is that we completely ran through this the quarterly open. So the second quarter's this second quarter that we're in right now, the market has completely traded above the price where it opened up at, and we are now seeing the market start to want to trade higher. What I see right now to the left of us is that we have this high here, which will be the high, July's initial high. So on July 1st, the week or the day of July 1st, it made its high, and then from there it's been consolidating / going down, retracing down into our weekly fair value gap. Now we're starting to see a run back higher, right? So we have expansion, retracement, a little bit of consolidation, a little more retracement, and now we're getting that expansive leg higher with the draw being at 101.97. So this week, I want to be seeing the market actually, if we can gap higher to open up, that would be cool. Because I really don't see any reason for the market to need to come down into this area. But that also gives me the idea that we might possibly get that run to open up the week with the market just continuing to trade higher because of how the move is looking right now. The market has already started its next phase of expansion towards this high, and when it started this phase of expansion, it's going to move fast. So we might not even get no retracement. The market may open up, gap up, and for the first couple of days of the week, we might be seeing some strong bullish momentum in the direction of this 101.97 level. So I think that to begin the week, we're gonna be looking for the market to continue its expansion higher, really, and not provide no retracements until it gets like it takes this. Once it takes this high, we possibly come back down into the consolidation range and come back and then do something like that maybe. But yeah, I anticipate the first couple of days of the market opening up to be bullish, and then possibly get some retracement with FOMC, or the market could consolidate some more, right, leading up to the FOMC interest rates announcements, because of the things that are talked about in those announcement meetings, in those press conferences. We could see that, those are the times that we typically see like crazy moves happen in the market because of people reacting to the press conference of the interest rates announcements. So we could possibly consolidate for Monday and Tuesday. If we don't continue to expand, we could possibly see some consolidation, and then waiting for that news release, and then we'll start to see some movement if we haven't already made our move toward that 101.97 level. So we definitely are bullish on the week for the dollar. And with that idea, week 4, bullish, looking for 101.97. Going to the stocks, starting off with Nasdaq, we see that we have with last week's trading, we have now closed below the midpoint of this fair value gap, which was the last bullish support that we would have been anticipating the market to start to trade higher from. Now that we do have this violation here, or this trade below the midpoint of this fair value gap, I'm now wanting to see the market close below May's open, and if possible, come back into this fair value gap area and use it as support for lower prices. This is what we're looking at. We could possibly be seeing the market, the stock market, start to begin some phase of retracement lower down into like the 27,000s. Yeah, like 27,000. So we could see it possibly come as low or be making its way towards this 27,000 as of right now, because of the fact that we have not found support here at this imbalanced area where we would typically want to see support for higher prices. We also have the market shifting below. This was the first time here that the market had traded below an old low. And when it did not stay below this old low, initially what I was anticipating was that this was a stop hunt below old lows to continue the market moving higher, engineer sell side liquidity here, and continue this move higher. But once we did not make a sustained close run above previous quarter's high, but essentially turned over and started to consolidate, this let me know that and now we have the market trading below this low. This lets me know now that we are starting to seek out old lows in the market, or seek lower prices in the market. So we have a situation where if we look at the swings, low, high, higher, low, higher, high, lower, low, lower, high, lower, low, right? So we have that. And now the market is starting to show some decline. So now that it's starting, we see that the market is starting to show some decline. The last swing that was formed was this swing high right here. Right, we have this swing high that has just formed, and now we want to see it come lower. We are current. This will the current candle that will open up and form for this week is the fifth candle in this expansive phase lower. So there's really no real resistance for this low, for this down move lower. And if anything, this is the market rebalancing itself after this strong impulsive run higher that we are seeing here on this weekly chart. And if we look to the monthly again to get an idea of how this candle could close, it's pretty interesting, because we also have, for sure, by the end of the week, unless the market just rips crazy and runs higher, for the rest of the week, something happens that causes that, this candle will close red and we will have a swing high formed in this market, right? With this being the first candle, this being the second candle, this being the third candle, what will we anticipate is the next candle to form, August trading to trade lower than this, than the third candle, which is the current candle that we are in right now, July. And so with that, that also lends credibility to the idea that we're forming a swing on a monthly chart. And with us forming a swing on a monthly chart, we could be looking for that price action to show on the weekly. With the weekly being in line with the monthly, we should see some heavy red candles start to form, because of the fact that there is alignment between the monthly and the weekly chart for moving in the same direction. So this is why that is an important draw on liquidity. This last high that was formed here on this weekly chart before the market ran above it, it's now coming back. I'm pretty sure if we grade this range out right here, you see that the market is retracing back to equilibrium. Look at that right there in the middle. So the market is retracing back to equilibrium, and we can start to anticipate some bounce once it does get here. But for the most part, we would be bearish looking this for this price for this area in the market until we start seeing swing highs form or swing lows form. You know, the market swinging low and then start to show us that it wants to trade higher. So dropping down to, let me clear this up real quick.
Wait, when you say equilibrium and you're talking about all these numbers being able to be broken down into a flat number,
What do you mean?
the math on it, you see these numbers here
Yeah.
from the highest to the lowest point.
Are you referring to these numbers right here?
Hmm.
Okay, so what these numbers represents are the quadrants that you typically uh want to start seeing certain price actions show up in, and depending on within these degrees or these quadrants, um when price action does start showing up, you can be more trusting of it, right? Because if we take the range of from this high, I mean from this low to this high, and then grade it, if we're always looking for the market to come back to equilibrium or discount, and we seek to buy from equilibrium and discount, then it allows you to filter out swing lows that are forming that are not below equilibrium and discount, right? Because we know that the best trades, unless the market is like completely hot, and it wants to it doesn't want to retrace that much, when you've already got an expansive move in price, you anticipate the market to come back to rebalance itself, because at this point it's moving inefficiently. You see that only buyers were able to, for the most part, participate in this move up, but we know that there aren't only buyers that are participating in the market. We know that sellers want to be participating too. So this is an inefficient move in price action. The market has to come back to rebalance itself.
Right. So you're saying that that red line at the halfway point, that's if it is going up, that it'll come down to that level, not exceeding that level, and then reverse going back up.
No, it can. So what I'm saying is that anywhere at this red line and below this red line is where we want to start seeing swing lows start to form and the market start shifting higher, because at this point, when it comes back to this red line and anything below this red line, it is a discount for people who want to long the market to be able to
Uh-huh.
get and maximize their profit targeting
A,
the
a
old
good
swing high.
entry point.
Right, a old liquidity point inside of this bullish market structure. Right, there's nothing to tell us that long term this market is going to start coming back down to this low, right? We would anticipate, if the market is still bullish, that it will come back into equilibrium to rebalance some of this expansive bullish price action, allowing those who want to sell inside of this move. And then once we do make it back to equilibrium, the market is then uh um poised to be able to efficiently start trading higher again,
Okay.
or start moving in the direction of the original trend. So anything below the midpoint, which is the 50%, and to the low, that is what we call discount. Anything above 50% to the high is called premium. When you are bullish in the market, you want to be selling at the equilibrium or below it. That allows you for a discount to sell, I mean to buy at a discount. When you are a seller, you want to short the market, you want to be buying, you want to be putting on your shorts at anything above the equilibrium, because at this point you're getting premium for your position that you will make money on as the market goes lower. So you want to buy as high as you can, right? You want to get the best premium that you can so that you could profit more in when the market starts to decline. So that's why you hear a lot of people say buy low, sell high, or sell high and buy it high to sell it lower, right? That's what they're talking about, or that's what they're indicating.
Okay.
There are certain portions of the range, there are specific portions of the range where you want to be more inclined to buy or put on shorts up here, because you maximize your profit potential, rather than putting it on right here at equilibrium to then sell short when the market could be reversing, because we know that people, or it typically buys during discount, so you will see longs start to form in discount, right? But if I'm up here putting on shorts, you know, I have a profit potential of, let's say I wanted to put on something right here, a short. Let's say I put on a short right here, right? This was my entry. For whatever reason, I probably thought the market was gonna come lower. I would have put my stop loss above here. You looking at, just even from right here, you making over 3 times whatever you want to risk, because you put on a short. So you got a premium price point to put on your position here and capitalize on all this movement or potential profit that you could get once the market does start to move back into equilibrium slash discount of the market, right? So whenever you're short in the market, ideally you will want to be looking for a short to form inside the premium, and you will be targeting whatever is in the discount, whether that be, let's say there was some liquidity right here, right? Uh instead of the market going higher at this point, it probably came lower, right? And made a swing low right here and then started to run higher, right? When you put on a position up here, you would be targeting this swing low that formed right here, right? Price point inside a discount that you will see the market will be drawn towards, because we're already moving toward back towards equilibrium slash discount of this expansive range right here, right? And then if we know that the market is either seeking liquidity or is seeking a gap in price, the area of fair value, we have this big imbalance right here that we could be targeting. We could be looking for the market to trade into, right? So we have, and then we also have equilibrium is also a target that you could be utilize for a potential profit target if you don't see no lows, or you don't see you don't necessarily believe that the market will be trading back into this imbalance. A safe target would be, okay, well, it possibly could just go down to equilibrium and then buy from there, so this is a safe target for me to take off some or pay myself at this level. So you also grade these ranges. So these levels also, this 25, the midpoint, the 75%, or the quarter, the lower quarter of this range. All of these targets you could pay yourself. All of these numbers you could pay yourself at, in case the market does come to these levels and then start to turn from there. So that's another way that you could utilize grading this range, grading these ranges.
Thank you.
Okay, so yeah, we're anticipating a bearish week on Nasdaq. Yeah, yeah, I'm gonna do it. I'll do it after this one. Uh, yep. So we're anticipating a bearish week. We drop down to a daily, and you see that the market for last week, we had Monday, it started to retrace higher, came into this area of fair value gap that was inside of price. And inside this bearish fair value gap, you see the market create a swing high, respect the midpoint of this imbalance, which is what we like to see as a bearish signature when the market is looking to find support for lower prices. You see it respecting the midpoint of that, and then we got the last 3 days of just bearish price action, the market falling. Again, we closed below the midpoint of this weekly fair value gap, so that's also telling that we could continue to anticipate this market to fall, and fall fast if it does, because all of this is low resistance liquidity, meaning that the market will find no problem with trading below these lows, because there is nothing to stop it from taking those lows, in the sense that we don't have any trap liquidity. We don't have any trap liquidity where the market would have done something like this, traded below this low and then started to trade higher, or traded below this low right here and started to trade higher. We will look at this low right here as a protected low, because the market has now trapped traders. The traders that were going short here, they're now trapped once the market trades above it, making this a protected swing. And the market should not come below this swing if it is bullish. And now we see that the market has started to run. We have no instance of that type of price action right here happening up here. And when you don't have that, it's more easier for the market to trade through those levels. Whereas even when the market started to shift and come lower, we see that we had some consolidation right here before we eventually ran this level, because this is a protected low, and the market will typically find a whole lot of resistance moving towards this low. You'll see a lot of back and forth price action moving towards this low, because it is a protected low, in that this was a stop hunt to run this sell side liquidity, and then the market trades higher. Right, so you'll typically see this type of price action when the market is targeting areas where the old stop hunt has happened, versus something where there is no stop hunt that's happened, but we do have lows right here. These are low resistance lows right here. So we could possibly see, and that would be in line with the idea of, again, on the monthly we've seen that swing high form. On the weekly, we're anticipating that this is going to be the fourth candle or the fifth candle. I can't remember exactly. I think it's the fourth candle in the swing high that has formed on the weekly. We're anticipating that candle to form a trade lower as well. So for me, I anticipate if this being the most recently formed swing high that we see, right? The most recent form swing, and we see that it has traded below this low. I want to see the market continue to run lower. We possibly get a retracement on Tuesday, and then Wednesday, Thursday, we make our move towards this 50% level, which is only it's about a 1,100 points from where we are in the market right now to the equilibrium. So we could possibly see a hot week in the stocks this week, or a lot of weakness in the stocks, especially if the dollar does continue to trade higher. Um, this is one of those weeks in price action where we would typically like to see the correlation, cross market relationship show up in the price action with a strong dollar and a weak stock market. So I'll do ES in a second, but if we are looking for bearish price action in Nasdaq, we could typically be looking for the same in the Dow and ES and Russell. So I'm gonna jump to Forex real quick and look at GBP. Man, if we are looking at the monthly chart right here, we have this last week of July, so we want to be anticipating what could happen and how this candle could close. Obviously, we are bullish in the dollar, so anything cross negatively related to that or cross inversely related to that, we'll be looking for that to come down. So for the last week, or if we're looking on this monthly chart, right, we have the last swing that has formed is this swing high right here. Right, we got this swing high right here. You see that we've already traded below a old swing low right here, and then the market has started to retrace in the month of July, and now we're starting to see that decline. We'll start to see it when we go to the lower time frame. It also did trade above the monthly high, and so if we do have this swing that has formed here, this is the third candle, this is the fourth candle. If this candle does close green, then that would be a swing low that has formed, which is just more evidence that we will stay in this consolidation if it does close green, because of the fact that we already have been in this protracted consolidation inside GBP since this time last year. So it could possibly form this swing and continue to go sideways, or this last week we could see it close red, and possibly make some moves back below this the previous quarter's low. And if it really is heavy, back below this low from November of last year. Go to the weekly to see how these candles are forming. Okay, so again, because we are in consolidation, this the formation of these swing highs and swing lows aren't necessarily that much of importance, because we know that swing highs, short-term swing highs, are going to form, and the market is going to trade below them and then start, or trade above them and then start to go in the opposite direction. And we know that when short-term swing lows that are formed in the market is going to want to trade below those and then start to move back into the range. This is the typical characteristics that we see in a consolidated range, right? Comes back to the top of the range, runs the highs out, and then trades back into the range. So this is what that consolidation looks like on a refined lower time frame. We can actually see what's happening in this, and it just lets you know that we can't necessarily be trusting these swings that are forming and looking for like sustained runs until we break below the low or the high, right? And find a sustained run, like a retest of that run, of that low, and then the market continue to come lower from there. Like, this is what I would anticipate if this swing high does hold up, it would need to come below here, come back to retest this area, and then start to trade lower. I don't want to see it do what it did up here, come up, wicked it, trades back into it, and then doesn't even come back above it, doesn't retest it, it just comes back into the range. That lets me know that this is still consolidation, right? So, but for the sake of this possibly being that time where we'll see the market start to look to break out of consolidation, we will be looking at this swing high that has formed and anticipating that in the direction of what this swing high indicates, that we could continue to see the market trade lower. We see that last week bearish close candle is the third candle in this swing high candlestick formation. So what are we anticipating with that? We look for the market, the next candle to form, the fourth candle, to be looking to trade below the third candle's low in the direction of the swing. So just off of this, we will be anticipating a bearish close week for the last week of July. And with that, if we're anticipating a bearish close week for the last week of July, we will be looking at the market possibly coming back below its open, right? So that would be 32.58. We will want to keep that, the opening price, in mind as a target that we could come back to. 32.58, 33, 32.58. I don't see where that is. March, let me see. Okay, so that is, the quarterly open, July. Okay, it's different on this time frame. 33. Yeah, for some reason it's different. So we could be looking for the market to possibly expand towards this this opening price right here. This will be our target, or at least we will be looking for the market to move in this direction, right? So from wherever the market closed last week to wherever it could open, when it does open, this will ideally, we will be looking for this as our first target. And if it really got heavy and started to move to the downside, then we will start to look for the low. But ultimately, we want to see the market start to trade lower. You also see that on Friday was a consolidation day. After this bearish expansion, or this bearish expansion move lower, we also have traded through a low, and we have also had a change in our direction from bullish price action to now the market taking out lows. So what I want to see is the market find some willingness to trade through this imbalance here. I would like to see the market trade through this imbalance here, stay below this low that we have right here at 133.22, and use this as the support for lower prices. So we'll see the market come out of here, come back into it, and completely make its move towards this low, if we are indeed breaking out of this consolidation and starting to make our move lower. I think that when the market does open up, because of us having an inside candle or inside trading, which indicates consolidation. Friday's trading was a consolidation day. We could see that Monday's trading continue that expansive run lower towards this 32.59, 33.22. So look about like 80 points, right? 70, 80 points from wherever it opens up at. Maybe even 100 from where it opens up at to that quarterly open, July open. And yeah, that's it for GBP. You need Euro done too, or you cool on that?
I'm cool on that one, bro. That was all I needed to see.
Yep, that's your range for Monday, Tuesday. You would be looking for the draw to be that July open at 32.59. Once it gets there, then you will kind of want to see it make a move back into this area of 133.33 at the high, and 132.91 at the low. You'll want to see it make its way back up into there, find some type of support. Maybe Tuesday, Wednesday, and Thursday, Friday be the 2 down days.
Why you be switching up support and resistance?
What do you mean support? Why do I switch it up?
Well, if it's going to the top, that's resistance. The bottom is support, but you always say it backwards.
Because it just depends on what side of the market you're trading to, right? So once we trade below this this area that we would have been anticipating the market to find support at for higher prices, once it trades below it, now it's support for lower prices. It's no longer resistance. It was resistance for lower prices when we come into it expecting it to trade higher. But once it trades through it, it now becomes support for lower prices.
I understand that, but you say it backwards. When you just like right now, when you said when it comes back up and tests the support,
Mhm.
to me that's resistance. Support has become resistance now, right? Because it's old support now, it's new resistance if it don't go past it.
Nah. Because if we're going lower, right?
All right,
Anything.
so right now that first point you got where it's heading 80 points down.
Yeah.
That's considered support, right?
Yeah.
Okay, then when it trade back up into that zone it just came from, that's considered resistance now.
Nah. It's
That's
the
still
other way
support?
around. It's the other way around. Yeah. Nah. I misspoke when you said when I said yes that this is now support. It's not. It's actually resistance. When we come in lower, anything that's stopping it from going lower is resistance, right? Anything.
It's support.
No, because now we're in a bearish market, right? So look, I'm gonna erase this black line, right? And let's just look at this from this standpoint. The market comes up. When the market is bullish, anything that's keeping it from going higher is resistance, right? Anything that when it comes back into a bullish market is support, right? So anything that's keeping it from going higher is resistance.
Exactly.
Anything that makes it bounce when it does go lower is support. So when the market trades up, shifts direction.
It's the same thing in opposite direction.
Huh? Yes.
Yes. Okay, I see what you're saying. There it is.
It's all it is it just depends on which direction of the market that you're going in.
Yeah, it's upside down.
Right. It's the opposite. The opposite applies. And that's what a lot of people like get mixed up at, right? So even when let's say for instance when we grade in the range, right? And I'm saying that here the top is the top is the high of the range and the bottom is the low of the range. If we're buying, anything 50% and below is discount for buys, right? But if we're bearish, anything above 50% is discount for sales, or we're actually getting a premium for sales. In all things, it just depends on the market structure. Whichever direction the market is trading in, that's where you would change the idea of it being support and resistance, depending on the direction of the market. So, but yeah, that's pretty much it though, bro. Look for it to sell, to open up the week, come back in to retest this, and then continue to sell towards this quarterly.
I had a totally different view of it, right? I was looking at it, okay.
What you looking at?
I thought it was going to jump up maybe like 50, 60 pips to fake people out, a fast move, and then push back down.
So
because that, let me see, where you got that at? You got that arrow right there, that red one, right above the green candle. The first red arrow above the second red arrow. I thought price may retract back to that and then push back down further. But you're saying it's going to jump from a little. What is that doji? Is that a doji candle?
Yeah, it's like an indecisive doji.
Yeah, so you know what I mean. Every time I see one of those after a nice sale, when price actually holds to the buyers, that gives them a right to. If you go back and look, it pushes up after a candle like that. So I thought it would be a fake out, you know.
So, that could happen. There's either two things that happens out of consolidation, right? And when I say that this was a consolidation candle, that's what I'm saying, that the market was consolidating on Friday. So there's only two things. We're not anticipating a reversal to happen out of consolidation, right? We're both in agreement that the market could either retrace or it could continue to expand lower. For me, I like to see the market continue to expand lower after a consolidation point, especially after the market has been selling for a prolonged period of time. You see the market been basically selling off for the past week without any real meaningful retracement higher. That lets me know.
Like you said earlier too, Like if you draw a line right there, a support line right there up under that the indecisive candle, you see it's a bunch of major points across the board, where they always retrace right there.
Mm-hmm. And then we're
So
inside this imbalance too, where it's already found support once, twice. You know, I'm looking for this now to start failing, right? And that's why I think that we do have this consolidation candle, because this point at which it
I'm
used to
tired of
come
this
down.
consolidation. I'm ready for it to go in one direction.
Man, hey, well, I mean, it has been going in one direction for for Friday. I mean, for the past week, with all of these down close candles. This is Thursday the 16th. You know what I mean? So since the 16th,
It's been
gold
fun.
the pound has been coming down. So I anticipate if this run is the true direction of the market, then it should continue to come down strong. Because it's already
Okay,
making its move.
so like she was saying earlier, I don't know if that's what she was talking to her about or teaching her about quarterly trading,
Yeah,
or the market running quarters.
yeah.
That's
Oh,
what I'm looking for this one right here. Like, get into that next quarter to where it's trading lower for like 250, 500 pips.
Oh, you want to look at the quarterly chart? Yeah, I always we always go over the quarterly charts as well. But because this is a new quarterly chart, I mean a quarterly candle that has just opened. This is the start of the third quarter with July, right? So
Yeah.
if we looking at a quarterly chart, you can still see that the market is, for the most part, like it's moving sideways. Even if we just looking at, this is a span since 2017. After this expansive move to the downside in 2022, we see that the market slowly is just like creeping back up. But since July of 2025, we've been moving sideways, right? So the market
Yeah,
is,
but look at those wicks though on them candles. It's like they can't close no higher.
yeah, it can't go no higher, or it's not sustaining any run higher, or it's not sustaining any run lower as well. That's also an indication of consolidation. There's an indecisiveness inside of this market, and it's indicated by these wicks and these sideways candles. So you can't really anticipate anything to happen. I mean, the most, if we're just going based off of swing highs and swing lows, we could say that if this last month or the last quarter, which was the first quarter, was a swing low that has just formed, right? Another one after this one, then we could be anticipating this quarter, which just began at the beginning of the month, to expand higher. That's the only thing that we could say. But even that's not even like, you won't put too much emphasis behind this swing low, because we have been moving sideways for so long. Like for me, I wouldn't start trusting this swing low until fourth quarter, because third quarter hasn't even closed yet. So the close of this quarter would give me an indication, like whether we want to be going higher or going lower based on how the third quarter trading closes. But there's nothing to see right here, or there's nothing of high probability that you could glean from this chart right here, because of there has been no sustained runs, and all we're seeing is wicks and not strong body closes. Does that make sense?
Absolutely.
Yeah, and that's why the forex market is on pause, Mike. I'm trying to tell you, man. The runs are not in the forex market. You look at,
I know I'm coming.
man.
I'm
I don't
coming,
know
bro.
how many times I gotta tell you, bro. The runs are not
I'm
happening
coming.
in forex.
I have on August 15th. I have a financial opening. I'm gonna drop a band in there.
All right, all right, no doubt, man.
August 15th.
No
Feel
doubt,
me?
no doubt,
I
no
got a
doubt.
financial opening.
That's what I'm talking about, man. That's what I'm talking about. But yeah,
Oh,
so
man.
that's why a lot of, even in like the trading space, you don't see a lot of people talking about the forex market anymore, and people are talking about futures trading and options and things like that, because the market, the big money is flowing in the stock market right now, right? If we look at like the heavy stocks, the big stocks, I mean, other than Tesla's in the dirt right now, but Apple's at its all-time highs. Meta isn't that far from its all-time highs, right?
You were talking about that last night when we was doing the replay back in, like, was it 23?
Yeah,
You were saying that it wasn't moving like it is now.
yeah, exactly. Because there's a whole lot more money that's flowing inside the stock market, whereas the stock market only used to move 100 points a day. Now you're seeing the market move on average 300, and that's on a light day. You know what I mean? On a heavy day, you talking
It
about,
has its time.
yeah, 600-700 points. But that's just you're right. That's also a point too. The market flows, big money flows long term, and so you will see on a long term basis when the money is flowing in one market and when it's flowing out of another market into a different market, right? At one point in time, stocks was booming. I mean, at one point in time, forex was moving a lot, right? Especially we talking about 2021 to 2022. You've seen a lot of money flowing in this, and 07 to 09, you've seen a lot of money flowing out of here, and we'll probably see a lot of money flowing into maybe gold, energy, cryptos, stock market. Yeah. So it's just there every market has its time where you seeing a lot of money flowing through. You see Amazon is closer at just at its all-time highs. All of these are the big companies and stocks. You see SanDisk is just like this is this is what they're talking about, the tech boom right now, where the market is just going up. It's crazy. This is SanDisk. This is like
Sandex is it's a chip,
a
right?
chip, yeah, the chips.
The memory chip.
Yep, the memory chips. Yep,
That's what we used to put in the cameras. The
exactly,
digital camera.
exactly. And you see this has just been happening within the past year. This market went from last year at this time. This one share was worth $42. At last month's trading, it was worth $2,300.
How?
That lets you know that the money is in the stock market because the boom is AI right now. The computer chips
They're
they need
using.
they
They're
need
using.
these memory
Okay.
chips. So
The demand is very high.
exactly, and with that, these companies that's producing this, they are making money. Their stock is going up, right? Netflix in the dirt.
Yeah, because ain't nobody trying to pay them damn subscriptions no more. We
Yeah,
figuring it out.
yeah. SpaceX is down from where it opened up at. So this is an interesting. Um,
That's a good way to buy right now. To buy
yeah,
some of that while it's down low like that.
absolutely.
This don't bounce back
Oh
up.
yeah, for sure, for sure. Yeah, so that's why the money is not flowing in forex right now because everybody's parked their money long term in the stock market, anticipating these runs, or trying to get in on these runs. Rather, you can even see that the money is flowing out of the bond market as well, right? People are not buying bonds, so the money is flowing out of the bond market, and they're parking their money in the stocks, right? This is the bond purchase is like a this is a I think this is a 10-year note, this is a 5-year note, and this is a 30-year note. So even the 30-year notes that people used to buy, betting on the U.S. government. You see, the U.S. government bonds has been so they've been getting so high because of the yield over years. This was like a safe bet for foreign investors to park their money inside of. But now we're starting to see a shift in bonds since 2020. People have started taking their money out of bonds and started to put it into the stock market.
Do you
See,
think that that's also happening? The whole stock thing right now, is booming because of marketing and social media. Like when I go on YouTube now, all it is freaking trading videos and advertisements, and even on Instagram. Like it's popular right now.
nah, nah, because the small fish is the liquidity. The people that they're advertising to, these are people that if they're barely finding out about the stock market or if they're barely getting involved in the stock market, they have no influence on the overall movement or trend of this of where the market is going. So they don't affect it. What moves the market is the big money, the people like I was telling you about, the institutional banks, the people that's printing the money, the governments that are investing large blocks of cash into other countries. Those are the what they call the market movers. Those are the people who dictate the direction of the trend because they have deep enough pockets to push the market. They have the liquidity. The people that are being the stock market is being marketed to on social media, and all of those people, those are considered the retail traders. We're considered the retail traders. We have even if we all got together, all the retail traders of the world got together and started to trade their funds collectively, they would still make up less than 1% of the money that is traded in the stock market or in the markets, period. The people who
Okay.
really move the market is the ones that what I'm saying, the unseen hands. the, the
Right.
the
I'm
the
sorry. You
countries.
said that to me so many times too,
Yeah.
and I still be like,
Yeah, nah, it's all good. You just have to know that the long term money is
I'm a small fish.
yeah, we're the small fish in the pond, so we have no influence on it. But what we try to do is see where the long term money is flowing and get in line with those players because that's where we see our biggest gains and our most easily traded assets work for our favor, work in our favor rather.
Yeah.
But yeah, even gold. Like we looking at a gold chart, and this year it topped off at $5,700, whereas last year around this time it was worth about $3,000. So even that bump, these are where the market, these are where people are parking their money at right now. But so yeah, and moving forward with that, we can now look at this gold chart and check out what the metals could be doing.
Yeah, let's see what silver is doing.
We got gold and silver, and so we can pretty much anticipate if we don't get that turnover this week, trading back below the open of July's price, that this candle will close green and it'll close inside of June's price action, and that will indicate that this is a consolidation as well after our expansive move lower since March. And that just lets me know that, one, if it does not take the low, that this is a consolidation and we could be anticipating a slight retracement slash continued expansion. And with us coming down into this monthly area of fair value, that we could possibly see a slight bounce, a slight retracement higher, slash a war wanting to trade deeper into this and then bounce a little higher from here. But we could possibly be looking for the market to turn around, coming like the August, September months of this quarter, start to trade higher. Dropping down to a weekly. Last week, we see that we're starting to now like move sideways, right? After June price action showing this down move towards these lows, we now have the market has traded below those lows, and we're going into a phase of consolidation. But this is good. This indicates to me that we could possibly still come lower, because again, we don't anticipate a reversal when we see consolidation. At most we will be anticipating the market to trade a little higher to retrace and then want to come lower again to retest these lows right here. And so for the last few weeks, I have been bearish since we did make this run up and failed to sustain it to go higher, but we did get that turnaround. I've been looking for a retest above these lows since then, and also because silver had been making its way below its previous quarter's low as well. We see that where silver is right now, it is a little higher compared to this low than gold. You see, gold has already made its way above this low. The low that was made in November 2025, silver has not yet taken that. So I see that when I see gold has traded below this low and has not shown a reversal yet, it lets me know that we could possibly have silver be looking to come below this low too as well. So with that, that also gives credibility to the idea that we're consolidating right now, getting ready for our next expansion phase lower, to allow for silver to trade below that low as well, and then we could possibly start seeing a bounce, a trade higher, dropping. So for me, I would want to see, in alignment with the dollar being bullish this week, I would want to see that we possibly could make a move below last quarter's low.
So with this last candle being green, doing its retracing, we do expect for it to come down some more. What are you thinking by Wednesday? Because that's when the silver expires.
Yeah, the contract, right? So
yeah.
My idea, so I admittedly, I wanted to see gold stay heavy for the rest of the week. So this is the daily chart, right? And this is what I was seeing happen on this chart. In gold, I seen that this swing high had formed, right? We had this swing high form here. And once it did form, I was anticipating that Friday we could possibly get that run below here to make it stay heavy. And I wanted this candle to close red, but you see that we got a green candle to form, right? Even though it was a doji candle, it's an indecisive candle, it's a consolidation candle. Because this swing high did form after taking out this buy side liquidity, I was saying to myself, okay, this is a great sign that we could be getting the market to trade below this low, because we have engineered this buy side liquidity, got people to chase this run higher, and now that we have trapped this liquidity and formed this swing high, that we can anticipate large red candles to start to form. But as you can see, we got that swing that formed on Thursday, and Friday we essentially got a dud. We got a consolidation day. If we look to a lower time frame, you can see that Friday's trading, we saw it come down, find some support here at the monthly opening gap, and then started to trade higher. And then towards the lunch hour PM session, it started to taper off, right? So that's not what I wanted to see, admittedly, but I want to see how the market opens up, and where we open up at and what it starts to do for the first Monday, Tuesday. I think Monday will tell us whether Wednesday we'll get this low. And for me, it'll have to open up like heavy to the downside and start moving pretty fast. Like I would anticipate I would want to see a big move on Monday, in order to be confident that we could be reaching for these lows by Wednesday. And so we will also be leaning on the strength of the dollar to also get us that movement that we're looking for as well. But I am bearish on gold and silver though, with the looking for it to take this low right here for this week. And we pretty much got the same thing happening in silver. I think that silver did not take this high though, right? So we have a divergence here. Is it? Oh no, silver did take this high. Yeah, silver took that high, so we don't have a divergence. But I want to see silver start to decline as well with this consolidation candle. Hopefully we get it to turn over. It has also traded below the midpoint of this gap right here. So that's also a good sign as well. You see that it's trading around the midpoint of it. So we want to see that this fell and the market continue to come lower in line with the dollar. So we're bearish on silver and we're bearish on gold, looking for 3,900, 3,957. Yeah. Want to see that there. And I want to see silver below. At the least, I want to see silver below this price right here, 58 or 55.83. Oil's been going crazy. That's why all our the price of gas is going up, especially with the war starting to kick back up again. We're now seeing that oil is starting to trade higher again, make its way back towards those $100 a barrel, 95 and 109. So if the war does start to pick up, we could possibly start seeing the market get back above these highs that it was at in March. With the closing of this candle on Friday, we'll have a swing low that has officially formed. So we want to see possibly Donald Trump might kick it up in August or September. He might pick up the bombing, and that'll be the catalyst or the reason behind the oil market going up. You see gasoline is at its all-time high. Yeah. Gasoline is at its all-time high. So we anticipating gasoline to continue. I want to see gasoline actually close above last quarter's high. Strong. We have a swing low forming here by Friday, this close of this candle. So that'll also be gasoline and oil moves in the same direction. So that'll be a good sign for gasoline and oil if we do get a strong close above this last quarter high. You would anticipate crude oil and UK oil, Brent crude oil, to follow that direction. Crypto, Bitcoin. So I'm seeing that Bitcoin is retracing right now. I've been eyeing this 49,050 since we were up in here, since we came down like 98,000. I've been saying that it's gonna come here, and we are slowly getting that. Right now, we are in a retracement on the monthly time frame, right? So this is the current price swing that we're in right now, from this high to this low. We're grading that out. This is the last swing. You see that the market has also it came up, retraced into this fair value, this area of fair value, and then started to trade lower from there. That's a great sign for bearishness or weakness in the market, when we see the market coming into imbalances and then trading away from them, finding support there. So with the market trading into this fair value area, let me change this. All right, yep. So you see the price coming back into to the equilibrium of this range. And once it does, I want to see the market just like hold up in here. This is also going to be a consolidation candle when it closes. So we could possibly see August turnover with a strong red candle down into this level here. That's what I'm seeing. This move, this up move, or July's retracement is setting up for an August or September run into this 49,000. Dropping down to a weekly. Last week of July, we could be anticipating a run above here. Just because the market has been retracing for the month of July, I think it'll cap off if we do get that run. If not, maybe the first week of August, get that run above into here. And we're still respecting this imbalance that we're in right now. So we get a run, a move where we possibly see this, trade up into it, and then die. All right, die down into 49,000. So I'd like to see one more impulsive move up. So we could be seeing a higher Bitcoin for this week as well, or consolidation to anticipate maybe the first week, second week of August, we get that run up into this area and then turnover from there. Dropping down to a weekly, so we want to be bearish. Well, we actually want to be bullish because I want to see it come into this area a little bit more. So I want to see that. Look into the daily. Yeah, nothing really to see on this right here. We got this low that has been traded below, and I just want to see the market rip higher now, keep going higher. So like I said, into this imbalanced area, trading above this buy side liquidity, and that'll be pretty much it. Buy side liquidity, trade into it, and then start to break back lower. It also lines up with this quarterly chart right here, where we've already formed this swing high right here, and then we want to see that follow through this month as well, or this quarter as well. Right now it's just creating that wick on this candle, on this quarterly candle with the trading higher. That's still that 49,050 level that we're looking for to trade below after it already taken out a low right here. All right, so I want to continue to see whether it has some room to take out more lows before it does turn around. If it does turn around, I think Bitcoin is in a very uncertain place right now because it has turned around. I don't think that we coming back here for a while though, honestly, especially how this quarterly chart looks right now. We're not coming back here for a while. It's a lot that will have to happen in order for the boom to happen in Bitcoin again. And if we get some type of closure, like some type of candlestick, some type of price action forming below the midpoint of this level right here, oh, Bitcoin could be coming back to zero. This is like the line in the sand right here. If we don't find no bounce from Bitcoin in this area right here, Bitcoin is going to be very cheap. Very cheap. So yeah, that's what I see in Bitcoin for the foreseeable future. Next couple months, I want to see a turnover and get towards 49,000.
That's scary because that's like a very short lifespan right there.
That's not a short lifespan because Bitcoin, I mean, it is, compared to like the stock market, Bitcoin was started being traded in like, I think before 2000, no, yeah, like 2014. Yeah. So this is when Bitcoin started to be traded. 2014 to now. It didn't have its time in the sun. If we look at the other crypto markets or the other top two crypto market, big cryptos, this is Ripple. It's also showing that, this is at that point now where if it doesn't start trading higher from here, we're looking at it going into consolidation around this area right here, or possibly even trading back, being worthless. Same thing with Ethereum. Ethereum's we seeing crazy spikes, but now we're in this slow descent in this consolidation, right? And we're targeting these lows. And it's the same idea that I was talking about the low resistance versus high resistance. Like we could say that this move was the last time that sell side liquidity was taken. And you see that with that, it ran and then distributed those lows to this high right here, and now we're coming back down, trading back below this low right here. That's problematic because this is supposed to be a protected low. You know, if the market is bullish, it should not want to trade back below the low where it just trapped liquidity at, right? So if it's looking like it's already making its way back towards that low, there's nothing else. We're not even considering this low no more at this point. We're looking for the market to come below here, because this low is now like a foregone conclusion that if we trade below here, the market is looking for old lows. You know what I'm saying? So we're now looking to the left to see, okay, well, where could we possibly come down even lower into then? This low, right? That's in line with bearishness and Ripple. It's in line with bearishness and Bitcoin. I think this is the low too. August 24's low. You see that, oh shit, Ethereum's already been below that low, right? So it's already been making this move below that low. That gives strong indication to Bitcoin's low being taken out as well. So we just watching the weakness really, because Ethereum's now leading in the weakness of the market, seeing that it's already below August's low, August 24's low. It made it below there in August, 2025 last year, right? So yeah, Bitcoin's coming down, and it could be coming down for a while too. But that's pretty much it though, for what we're gonna be anticipating this week. Bullish in the dollar, bearish in stocks. We want to see some bearishness show up in gold, and bearish in forex as well. So that is the business.